Welcome back, everyone, to the Audacious Money Witch channel, where we talk about stocks, investing, and trading. Jim Cramer said Tesla will be the first to fall in the Magnificent Seven. Why it must be a good sign for Tesla stock.
Figure out which of the seven is going down early. I mean, who's to say we need all seven? Only 3 survived the movie. To me, it's looking a little like Tesla will be the first to fall. We have a CEO who's got a little petulant again, talking about needing to control 25% of the company in order to innovate. I guess it's not enough to have 13% be the richest man in the world. Elon, bad look. Magnificent Seven. Just like in the movie, the seven were never buddies. Did you know that? So is Musk. It's kind of like Dobbs and Harry. I mean, really, can you imagine, just humor me, can you imagine Jensen Huang coming on air and saying he needs 5 times his current holdings if he's going to do some super duper generative AI? I mean, can you imagine that? Pure hubris, which is why Tesla might be the first to exit the seven.
Other than Jim Cramer calling him out, there's a lot of negative drama in the mainstream media with Elon Musk. There's a piece from Wall Street Journal. Elon Musk has used illegal drugs, worrying leaders at Tesla. Some executives and board members fear the billionaire's use of drugs, including Mary Jane, mushrooms, and whatnot. There's obviously the drama around the Twitter acquisition and a lot of shareholders being very frustrated at Tesla that Elon seems highly distracted by Twitter. And then there's this. We all know that zombies aren't real. But when it comes to the Tesla zombies, those are apparently real. I'm talking about the 129,000 Tesla Model S Plaid that just 3 days after release, a driver took it out on the road only to notice smoke coming out of the back of the car. What? Of course, the driver tried to get out of the car, except the electric door system failed. He was stuck in the driver's seat, but was eventually able to manually force open the door after he got out of the car, continued to move another 40 feet before it burst into a fireball. Took firemen over 3 whole hours to put out the fire, came back to life and caught fire again. What? Are you kidding me? Fire rescue team fought and Tesla fire to continuously reignite it. Yes, Tesla can literally reignite even after being put out, despite firemen at the scene using tens of thousands of gallons of water to cool the batteries down in the Tesla.
And we had to get on that battery. The firefighting is very different. It's really just cooling and containing, trying to keep the car body, the interior from catching fire and adding heat to the equation. The crews this morning did a great job.
The owners of the car didn't want to go on camera, but they told me they had just picked the Tesla up from the dealership after getting its battery replaced. They say they had it in the garage around 12:30 last night when they started hearing clinking noises and then saw smoke. Fortunately, there were no serious injuries, although the car owner did have to go to the hospital and get checked out for smoke inhalation.
That Tesla reignited itself over and over again. The firemen described the first-hand experience as surreal and scary. When the firemen thought they finally put out the fire, it lit again with vengeance, and even as the Tesla was being towed away by a tow truck, it caught itself on fire again. Can you believe it? What the F?
Model S Plaid burst into flames earlier this week while the owner was driving it.
I'm not bullish on Tesla, by the way, in the short term, meaning the next 3 to 6 months. And keep in mind, I do have a hedge on for Tesla that basically is betting on the downside of Tesla also. So at some point, I'm going to take profits on.
He says he was on his way home. He'd been out running errands when the car started shaking.
I pull over to check and see if I have a flat tire or something. And the moment I opened the door, I saw smoke coming from the bottom.
The smoke, he says, quickly turned into large flames. He recorded them on his cell phone.
And they can reignite. Tim Baker towed this Tesla to his lot after firefighters put it out.
I went back in my office, got a drink, sat down on the couch, and one of my employees yelled, "Hey, there's a fire."
Baker had to push the car out into the street.
Another eventful day.
And you can see the car still on skids, pumping smoke, sputtering into flames. They had to plunk it in the drainage ditch.
Then there's China's BYD, which recently passed Tesla in global sales of electric vehicles, is exporting its cars around the world. Also, Musk asserts that when it comes to functionality outside of predictive speech using large language models, no one beats his company. Tesla has the best real-world AI team on Earth, period. He told investors in October, and it's getting better. But the narrative has begun to become tiring for many now, and Tesla's stock is down 16% since the year began. Even as many of its Mag 7 peers notch new all-time highs, Tesla has traded sideways on balance since December 2020. More importantly, many investors regret missing out on AI chipmaker Nvidia tripling in value because their money was tied up in Tesla stock. At this point, Musk will need to show his AI team really is as good as he claims by finally delivering on his ChatGPT moment. Otherwise, he risks more investors losing their faith. Despite all of this negative news, what we really need to do is ignore all of the speculation, the craziness. Even though those incidents did happen, panic selling once can destroy years of sound investment decisions. I am talking about you can fail even after you have waited 5 years for a thesis to play out. You could get your shares stolen by an unexpected event or incident. So structure your emotions to ensure this will never happen for you. Tesla sentiment going into fourth quarter print extremely negative despite these good data points. Number 1, continued strong China weekly insured registrations. Number 2, higher than expected fourth quarter deliveries. Number 3, declining lithium carbonate and other costs. Number 4, strong 4Q industry EV volumes plus 30% year over year. Number 5, $7,500 IRA tax rebate, which can now be taken off invoice. Number 6, huge Cybertruck interest. Number 7, Model 3 refresh. Number 8, ICE competitors scaling back their EV ambitions in the face of huge EV losses per vehicle. Let's break this down. In its most recent quarter, Tesla had around $23 billion of total revenues. $19.5 billion of which came from selling cars. $1.5 billion came from its energy business, with the remaining $2 billion coming from services and other revenue, which include Tesla's supercharging network. To us longs, Tesla is both an auto stock plus an energy, AI robotics company. I believe investors should not ignore the continued developments of Tesla's other bets. These include things like turning its car into something more like software subscriptions, which incur reoccurring revenues as Tesla already does with its full self-driving software and robot taxi network that does not yet exist. There are also projects like the Optimus humanoid robot. Dojo, the supercomputer Tesla developed for its automated driving system, could add $500 billion of value to Tesla. Even though it is difficult to explicitly validate the many claims Tesla has made about Dojo's cost and performance, Tesla has a chance of bringing forth a competitive, customized solution given the company's innovation track record and capabilities. You can see the implicit value investors place on Tesla's and Musk's ability to spin up new businesses, not just in Tesla's high stock price and overall valuation around $650 billion. Compared to $270 billion for Toyota and $50 billion for GM, both of which sell many, many more cars, but also in how investors value Tesla's earnings. Tesla's price to earnings ratio is around $60. Ford, GM, by contrast, trades at 4 times earnings, while Toyota is around 10. While luxury automakers have higher valuations than mass market car companies, still Tesla trades even higher than automakers like Porsche, Ferrari, and Mercedes-Benz. Tesla's high valuation is highly dependent upon Tesla's accruing value as an AI enabler, and that any change of organizational or legal structure that impedes Tesla's ability to perform in the development of AI could be detrimental. While it's unlikely that Musk would be able to break off the robots and AI initiatives that literally power Tesla, the threat is enough to spook investors given Musk's obvious willingness to pursue major projects outside of Tesla, like SpaceX, and the high valuation those projects can get from investors, not to mention the amount of time and energy Musk spends on them. Even if Tesla reports a disappointing outlook for its EV business with its fourth quarter earnings, expect analysts and investors to be interested in what Tesla isn't doing yet, but could be doing in the future, as long as Musk is still there. The key to my bullish thesis is that all AI initiatives be kept within Tesla. If Elon Musk really is Iron Man, Tony Stark of our time, if he ultimately went down the path to create his own next generation AI company separate from Tesla and let his girlfriend run Tesla, that would clearly be a big negative for the Tesla story. Then Jim Cramer could be right. But I don't see that happening at all.